right, welcome back, traders and investors. This is the Benzinga Pre-Market Prep Show. I'm Garrett Cook, and I am joined here with Serge Berger, head trader and investment strategist at the Steady Trader. Serge, how you doing on this Wednesday morning?
I'm good, sir. How are you, Garrett?
I'm doing fantastic, just getting through the week. We got a lot of earnings coming out, and it seems like the hot stock of the day is going to be Tesla with all the confirmations and discussions that have been in the news with it, kind of choking out in China, firing people, and it looks like the hype of future expectations for Tesla is getting trumped by the current realities of the company. Do you have any thoughts on Tesla? What are you thinking as we head into earnings?
As a matter of principle, and I've discussed this before on the show here, to me, trading earnings is something that I do after the fact. So I'll look for a move to come out, and then I'll hop on it or fade it for equity specific. So to me, that's what I'm going to do here obviously remains to be seen. But I do think Tesla is obviously well positioned through a longer term lens. So, anytime you get to buy a stock like that when it's like, 20, 30, 40% off its highs, I think it's worth sort of adding it to to the longer term portfolio. As far as the stuff out of China, the kind of headlines we just got recently, I mean, it seems to me like it's more of a media thing. They keep trying to just find things to kind of throw at the company like that, just like every time Apple had a little stumble over the past few years. So I would kind of take that kind of stuff with a grain of salt.
So it sounds like the way you're saying it, then you're kind of bullish on Tesla. I mean, it's tough for them because they're in a new industry right now. But do you think that there's a potential for these electric vehicles? I mean, we look at all this electronic stuff that's out. I was just watching some Top Gear show the other night, and they were talking about failures that you can have with electronics, and it just looks like with the way Tesla's set up with having the electronics of it, and then also the costs of having to replace batteries. I mean, they're cutting edge, but it seems like this is they're kind of struggling right now. And do you have any price levels you're looking at for this company? Are you long Tesla? Do you like this as a long term story, even at 216.29 this morning?
I do. I think this. I don't have a price target per se, but I think if you have this through a longer term lens, this is to me, maybe this and like I don't know what else you can toss in there. Maybe some of the automakers in this kind of space, maybe probably like a Google, even like an Apple at some point. I heard some rumors the other day.
Yep.
At the end of the day, the fact that we're going towards more automation everywhere is there, right? It's just a matter of time until we have the electric vehicle stuff, but also automation. Just like the Flintstones at some point. I mean, to me as someone who doesn't really enjoy driving so much, I can't wait to sit in a car and just kind of hit a button and get pushed from A to B. And that people think that's going to be the first thing to implement. It's not really the case. What's going to happen is we'll have some sort of automated driving on like highways and stuff. So I think that technology is going to be a game changer, and Google and Tesla's well positioned for that.
Let's just speculate there for a minute before we go on to another company. So with Tesla and we have this automated driving, what do you for as far as insurance is concerned, I mean, if somebody else is creating this electronic vehicle, it sounds like there's going to be all sorts of disclaimers that we're going to have to sign when we buy these things to make sure that we are freeing any of the creators from any liability for things that may go wrong. So do you expect to see people that are more aware of what's going on with cars, or to make these cars run more simpler so people can understand them? The insurance angle is what I'm most worried about with these companies.
Oh, and I agree. Obviously, there's a lot of regulatory things, and that's every time you ask one of those companies, what are they struggling with? For example, Audi's in the forefront of this kind of stuff. It's a regulatory issue, right? They need to somehow get past the local authorities, the federal authorities, and then that all over the world, right? So this will take time. And from my understanding, and I actually follow this pretty closely because, like I said before, I really can't wait to just have an automated car, But so I think the technology is kind of pretty close. It's just being able to sort of pass this on to. So then, to your point, the insurance thing is going to be just as much getting used to it. It's just a game changer. It's a new, just like we had cell phones. Now we're going to have this, and I mean, not cell phones. I mean, a smartphone. So it's just a different thing we have to get used to. We'll get through it. It's just going to take some time.
No, it's just more cost into the end consumer. Hopefully, our wages will rise with it, so we can handle the extra costs that we're going to have. Now, why don't we move on to another company that's going to be releasing earnings today, Baidu? Do you have any views on this?
You know,
It's a
Chinese
tough
internet
one.
stock, right? So to me, though, every time I see that, I take a step back and I approach it more from a trading perspective as opposed to something I can just. It's sort of the opposite of like a Tesla, right? Because to me, I'm still skeptical of transparency, and I think that's not completely wrong, right? And this thing it can move a lot after earnings, right? I mean, this thing can have a 10% move like that, right? So I don't want to touch something like this blindly on the long side unless I have it from a trading approach.
Yeah,
And
sorry, keep
I
going.
don't know if there's levels you want to look at or something like that, but
Yeah, if you have anything that you're talking about, I mean, it looks like we're kind of trading around the 219.5 level here, and it
mhm.
seems that it's been, a level of resistance, and when we've jumped up above it, we've ran just over 240, perhaps even to 250, and then
Mhm.
corrected right back to it.
Yeah, so exactly. So I think again, we have earnings coming up, right? So basically anything can happen. So I would just focus on the bigger picture area here. So, this stock can gap up or down 10% like it's nothing. So I'd probably focus on like the very broad support areas, anywhere between like let's call it 190 and like maybe 200. That's kind of like that's your big picture support area the stock probably needs to hold, right?
Hmm.
And then on the upside, if this thing can somehow clear, say 235, which again is not a big move for a stock like this, then it might be off to the races to new highs through a multi-week lens, right? But trying to sort of pick a little, a to the penny spot here before earnings for a stock like this, to me personally, seems a little bit silly.
Yeah, that's going to be a tough one to actually end up pulling off. Now, we're talking about Chinese internet, we're talking about Tesla, we're talking about game changers and new guys. What do you think about FireEye? And with all the news that's been coming on about President Obama, we were talking about earlier today, what do you think about this whole cybersecurity situation, especially in light of Tesla and electronics and Wi-Fi communications?
Mhm.
We're going to need more cybersecurity.
Look, to me, like I just wrote about this the other day. To me, this cybersecurity stuff, if there's something I want to just if I want to say put five stocks in like my daughter's college fund or something like that, like this space would definitely be involved because it's a no-brainer, right? Now, someone actually just played devil's advocate to say, maybe these companies get hacked too, which could lead to another source of trouble. But FireEye, I think, is in a good spot, and you've seen this stock kind of perk up over the past few months every time we had something happen, a major hack attack or something like that. And there've been a couple, I think, Facebook and Twitter hacks of more notable category just the other day. So the stock like this, it's actually technically sets up perfect. If this stock can clear 37 after earnings, I mean, it can really start moving. It's from a technical perspective, it's built a huge base. I mean, look at that thing. It started bottoming there in May last year, then double bottomed in October, higher lows, and it's literally like coiling up for a move. But we now need to see what the earnings say, and if we can get a follow through buying there, then I think this thing can really start moving higher.
And if I know anything about the street, they're going to try to hype up some sort of potential contract. I'm sure there's going to be all sorts of headlines coming out from all different kinds of traders and
For
writers and
sure.
articles out there talking about hopefully a potential contract. So we covered a car disruptor. We've covered Chinese internet stock. We've covered cybersecurity. Let's take a look at something a little bit more generic. If I could ask you about something like a Panera Bread, there's been talk about some strong same store sales that were coming out in January. Breen Capital was out this morning highlighting a couple of these, and Panera was one of them. Panera is
Mm-hmm.
expected to report after hours today $1.81 versus prior series of $1.95 in revenues. Looks like revenues are supposed to be somewhere around 675 million, compared with the same time last year of 661. So what do you think about Panera? I mean, it seems like people are
Mm-hmm.
still willing to go out and buy food and pay for the high end paninis.
Yeah, I mean, for one, in full disclosure, I really like Panera. I'm
Oh,
a
really?
frequent guest, and the bigger picture here is this company. Like, if you look at it, if you look at a chart and you pull this back a few years, it has literally like won every battle there's been. It's won. It's come back very strongly after a lot of people wrote it off. After the financial crisis. Then we've had rising input costs. They've been able to sustain that, and the stock is basically stuck in a big picture range ever since, like, let's call it 2013 or so. Um, but at the same time, the underlying trends are there. A lot of the research you can read on some of the millennials, what kind of stuff they like to eat, and Panera kind of fits into that category, to some extent. And then the fast casual stuff is still kind of working. So I don't see any major reason to go short a company like this. I think you got a company here that maybe along with the bigger picture secular bull market that I remain of the opinion we are in, should continue to push higher. So even buying on the dips, it would be my thing to do from if you more like near term oriented. If this thing can clear 178 or so after earnings, you might be able to gap up towards that 186 area and fill that gap from what was that, March of last year.
Hmm. And it also, I don't know what to think about the retail food areas because I know people like to go out and eat, but personally, it's a little bit more fun to stay home and cook. And some of
Hmm.
these places, it seems like Panera. I mean, they do cycle their menu around enough, and they do have fantastic enough food. They do keep the staples that I enjoy. But let's take a look if I could get your input also. Aside from having to go out and buy prepared food, there's places like Whole Foods where you can go out
Hmm.
and get your own stuff. You have this whole organic movement. We were talking about this stock the other day and wondering if this kind of thing could actually pick up with the populace. I don't have a Whole Foods anywhere. I've never shopped at it. I've seen them, I think, down south, but they don't have anything like that back in Buffalo, where I'm from, and I haven't seen anything in Detroit, but I don't really get out much here. What do you think
Hmm.
about Whole Foods and these kinds of things? Oh, there definitely is. I'm being told there's one in Detroit, but
There's one in Midtown Detroit.
like I said, I don't get out much. So,
He doesn't get to Midtown. Okay.
but Serge, what do you think about a Whole Foods in light of what we're talking about with Panera? I mean, is this a place that you would go to if you like Panera food? Would you end up going to Whole Foods in order to cook at home on the weekends?
Yeah, I mean, and I do. I was at Whole Foods. I believe it was 2 or 3 days ago,
Well,
and I think Whole Foods, very much to your point, kind of goes into that space where people are just a bit more aware of what they're eating. Is the stock a no-brainer to chase higher after every update? No, of course not. It's probably a bigger picture story. I I have a hard time imagining, if I go to these, let's put it this, if I go to these stores and I go to about three or four, no, probably 5 or 6 different stores around the country, depending where I am. So I know 5 or 6 stores very well, and they're always packed. Every single time they're packed. And the amount of food that they produce in any store in given age is insane, right?
hmm.
So, so to me, that's a pretty good litmus test. From a trading perspective, the stock's kind of had a very, very tight trading range here ever since it gapped up after earnings in last November. So I have a hard time chasing it higher until it consolidates more. That's a matter of personal approach.
And it,
But yeah, I think there's a long-term story for sure.
it looks like, I mean, it seems like the convexity of the gain after the November earnings is kind of starting to flatline a bit here. It seems like the push to 55 is going to be less likely compared to a drawback to about that 50 psychological level, where it appears to have broken down in the early part of 2014, perhaps around Q2 and late April, perhaps May.
Hmm.
I don't know what to think about the Whole Foods and everything that's going on here. I don't know what shipping costs are going to be for these guys and how grocery stores look, but I am more willing to spend personally when I analyze these companies, I look at how I behave. Because I tend to be a little bit more strict with the way that I spend my capital. So if I'm more likely to go out and buy the Whole Food stuff under the premise that, oh, hey, it's going to be taken more well care of while it's being transported to me, I'll probably be willing to pay a 30% premium for something like that.
Yeah, I mean, and that's a good point. I think another way to look at this is it's just one more place to shop at. So just because Whole Foods is around doesn't mean everyone has to get every like I never I'm never going to buy milk at Whole Foods, right? It just to me doesn't make any sense. I can get the same milk for a lot cheaper at like the normal quote unquote grocery store. So it's just another outlet to shop at, right? It doesn't mean they're going to steal all the sales from everyone and that's the only place we're going to shop at, but it's one more avenue for certain things. Like I think they have a great fish, a fish area to buy fish, and I think they have a good whatever. I think I buy bread there and stuff. So it's again, it's just we evolve in our consumerism, right? And this is just one more place to shop at.
Definitely. And speaking of evolving in consumerism, maybe we can push it to a more macro level. I mean, we're always trying to get individual views on oil, and we're trying to get an idea of sentiment here. And there seems to be individuals that are bearish on the futures because of the inability to really get an intrinsic valuation. People just seem to be re-anchoring their thoughts or their expectations each day as some new information comes out, whether it's a rig count, whether it's a layoff, whether
Mm.
it's a potential change in refiner margins. What do you think about oil going forward? Because it seems like we're kind of stuck in this period now where a lot of the oil producers are kind of running on inventory, and it's going to
Yeah,
show strong numbers, especially as they lay off workers. What do you think about oil going forward?
yeah.
Is this viable where we're standing at this level?
Well, I think two things. I mean, first of all, we need to differentiate between the price of oil and oil services companies stocks, right? Two different things. Yes, obviously they're highly correlated, but there are still two different things.
Entirely.
So, so definitely, I would suspect that oil services stocks will be bottoming before the price of oil, right? So that's number one. And number two, I again would point towards the fact that the entire movement we are seeing in basically anything from online sales to other things is deflationary, right? The internet, for example, is very deflationary, and it actually does spill over into the real economy. So I know it's a supply and demand issue here as well. There's too much supply, but I think overall people need to understand that we just are not in an inflationary environment, right? And that's going to keep the price of oil suppressed for some time. Now, where's the fair value for oil? I don't know, but what I do know is that you have a drop from $100+ down to 45 or whatever crude was at just a little while ago in a matter of 6 months. That's a very, very big move for a very, very important commodity, right? And it's not going to go back to 100 anytime soon, and it's probably not going to go to $10, like I heard someone say. So you'll probably, in a situation like this, in my 15 years of trading and managing money, I can tell you that most of the time, pretty much everyone's going to be wrong, and you have to kind of make up your own little consensus in the middle somewhere, right? Which to me would speak that this price of oil is probably going to end up somewhere near 60, $65 or so, which is kind of midway.
All right, excellent then. Well, thank you, Serge. Let's wrap it up then. I'll give you one more question. I want to get your view on what you think the S&P 500 is going to be doing over the next quarter, if not the year. What are you bullish? Are you bullish U.S. equities in light of all the central banking news and the speculation of a rate hike, which seems to now be somewhere around September, according to Morgan Stanley? What do you think we're going to be doing in the S&Ps? Are we going to continue to climb? Are we going to continue to struggle along here?
Yeah. Well, and here too, I would say two things. So first of all, the S&P 500 is something that people probably put a little bit too much weight on. It's what's kind of more important is probably the Russell 2000 for U.S. domestic plays. But what I will say, when you look at the S&P 500 and you look at the macro picture, which is kind of what you're hinting at, we've seen a lot of volatility in currencies and commodities. Ultimately, you see that shift into some sort of more volatile environment in equities. We haven't seen it, and I suspect we will see something in the next quarter. I don't know exactly when that's going to happen, but that's my inclination. So personally, I tell you, I'm actually short the S&P 500 right now, but I'm long the Russell 2000. So that's my positioning here, and I'm happy to change my mind if we see a more sustainable break higher. But for the time being, I'm kind of hedged that way.
Oh, wonderful. All right, Serge, well, I appreciate you taking some time out on this Wednesday morning to talk with us and give me your lowdown. Ladies and gentlemen, we've been speaking with Serge Berger. He's the head trader and investment strategist over at the Steady Trader. Serge, I hope you have a great week, man. I'm looking forward to talking to you again.
You too, Garrett. Take care. Thank you.
Thank you. Thank you.